It's July. 3 stocks you need to look out for. We don't own any of the 3 stocks mentioned on the slides. Now guys, if you're really interested in building a 6 to 7 figure portfolio, we've got the perfect solution for you. Head over in the comment section or the description to sign up for our free masterclass where you can get all these proven steps to achieve it. As always guys, not a buy-sell recommendation, also not financial advice, you know the drill. We are going to be looking at 3 companies, EPMB related to cars, car chassis, Capital A or Asia, formerly known as Azure, and of course Spastec, a hated company, at least for the past year or so. We're going to look at what in the world is happening. So we'll start with EPMB. Of course, we all know that there's some sort of EV trend that has been happening, and they are up actually 120% in the span of less than 2 months.
Yes.
This is pretty crazy.
Yeah.
But you know what's crazy is that they only had 200 million market cap.
Yes, I believe previously also they went up quite a bit before it actually went down. It is actually related to the same news that I'm about to show you guys. That's what causes the share price to rally, and that has to do with them actually getting the license or maybe even the approval from METI to make EV cars. And they also did mention that they previously did sign an agreement with Shark Gulf Technology, which is also a company in, I believe it's in China or Hong Kong. This CIS Pride Silver Rock Fund is basically just a fund management company that invests a lot of company. I believe they are like the bridge for EPMB and Shark Gulf to actually do business. And what they say is that they're going to establish a manufacturing facility and also a sales and distribution center for this Blue Shark brand of 2-wheel EVs. So if you notice the date, right, March 8th, March 8th is somewhere around here. I believe it's still fine. But then previously they did mention a little bit about going into EVs. This is actually to when the announcement actually did happen, right, is also kind of like on the hype cycle of this EV thingy, where the government actually is on track to want to target about 10k EV chargers by 2025. Oh, sorry, I'm mistaken. I think previous video I did mention it's 2050, but it's actually 2025. Yeah, it is much more earlier than expected. But and also it also have something to do with Anwar having a virtual meeting with Elon Musk on Friday. If you didn't know, we did a video on Tuesday already, so you can go watch it. But yeah, there's a lot of hype around it. But the thing about EPMB is that there's actually a shareholder that emerged, kind of like justify that this is not just purely just a MOU, right? Just all talks. So actually this HKFAEX is also a Hong Kong. Yes, it's a Hong Kong related financial fund. They did emerge as a substantial shareholder, and Hamidon bin Abdullah, who is I believe the MD of this company, actually did sold shares to them. Which he's under mutual concept Senia Berhad. So you can see this is 2022's shareholdings. They own about like 61 million shares, but then they sold quite a bit to HK. But this is just another follow-up. Basically, the rally in share price, they are kind of like anticipating that they can make similar profits in 2011. I believe in 2011, there's some sort of like an automotive boom during that time. So they kind of like expecting them to make similar profits with this EV venture. So if we don't see they deliver this 38 million in bottom line, I think you know what happened to the company's share price. So it's now all comes to the deliverability, the numbers that they're going to present in the next few quarters. And this is just a history of their PE valuation. So in 2011, 2010, I believe there was not really much of a premium. They are trading about 10x. I think back then it is considered a premium when you are actually when the share price actually rallied. So they're trading about like 10x, but right now they are kind of like double the valuation as it was before 10 years ago. So this tells you that a lot of people are putting a lot of emphasis on EV. A lot of people are actually paying a premium to ride on this company that have to do with EVs. But we don't know, because right now it's all talk. That's why we need to see the numbers. I mean, you can see the same thing happen to Sun Surya. Because Sun Surya previously, when Arnold actually went to China and have a meeting with them, they did mention about EV stuff. So that's why you notice there's a rally in Sun Surya, but then it start to taper off because there's no,
That's
it's just
the
news.
market for you, yeah.
Yes, exactly. So everybody is just hype up about the news just for the next few weeks. Then after that, it start to die down. Not sure whether this will happen to EPMB because it is also something similar to Sun Surya. But the only evidence that they have is that they have approval from MITI that they can do such business. But it is still all talks, so there's still no numbers to show. So yeah, this is just the comments that I have for them, is that whether their profits can go back to 2011 or maybe even better than it was back then. And it's all talk, no numbers back. Will it sustain? I think it may not. That's my personal view because it is still too soon to tell. Who knows? Maybe all of a sudden they decided to cut contract. You never know also. Until something shows, then only we can decide. But any comments on EPMB?
Nope. All I can say is that I used to look at it maybe 5 years ago. It looked good in theory because it was quite cheap. But I think the kind of manufacturing that they provided is not the most
exciting.
Yeah. Anyways.
Yes, automotive parts.
But guys, before we move on, if you're someone looking to level up their stock investing skills and you need a lot more guidance, we do have a one-on-one program called the Mentorship Program. If you're interested, you can apply it in the comment section or the description. Asia, let's go. So Asia, basically same price as or lower than IPO probably, right?
Yep.
And but it's up 34% in 6 months. 7 months.
And it is also kind of like at the bottom, sitting around at the bottom there. I mean, the market doesn't really like capital A at the moment.
Well, I think a lot of it is people don't like Asia. A lot of them don't like Tan Sri Tony. And also, I think their big mistake was really paying out that huge amount of dividends when they sold their planes, I think in 2018, 2019.
Yeah.
And I mean, it's just such a shame because they did it and then COVID.
Yeah.
So imagine if they didn't actually distribute and they had the cash, I think they wouldn't have entered PN17 status. But it is what it is. They're back and I'm quite sure that they're making more money now. But I think people are a bit fed up.
Yes. Correct. So if you look at the latest number, I mean, so far there's no sign of, there is some sign of recovery if you compare between 2021 and 2020 numbers. So it's slowly coming back to its level at around like 2015. But then the profit is still not on site there. So you can see the latest number. It is right now they are making a slight profit. And it has something to do with their aviation business. So yeah, obviously because right now everything's opening up, especially for China is reopening. So revenues and profit you see coming back soon. So and also they got a few business segment which is something to do with their logistic and also the digital and others. I believe that is their Big Pay and super app also. So all these actually have contributed them to achieve better result because of this reopening of aviation, because there's a lot of bookings done in their apps.
And it's quite interesting when you observe because they went from 80 million to now almost 210 million. That would be okay. The growth is not as big as the aviation. Aviation one is almost 4x, almost 4x, whereas the digital one is only
2x,
about 2x. So one of the things about what Tan Sri Tony has always been trying to say is that we are no more just an aviation company. We are a digital company. Now, it's very similar to the argument that people who buy Tesla say, the company, they say that, it's not a car company, right? It's a software company, it's a battery company, things like that. So I can see the trend of, Tan Sri Tony wanting to do that, but as you can see, the growth is still a big chunk in aviation.
Yes,
that
correct.
said, I'm not sure if we have the numbers here, but what is the margins for the digital side?
Okay, so the margin, I believe, is also around like 10-15%.
For digital?
Yes, correct.
That's kind of low, honestly.
Yes.
I expected it to be high. I expected like the profit contribution actually to be much bigger, compared to the revenue contribution.
Yes,
right?
exactly.
So
but
I think
it's
that's
actually
something
more or
for
less
them
the
to
same.
work on.
Yeah, correct. So this is just the revenue side of things for the further breakdown. So the passenger revenue, the seat sales, and also the digital side. You can see that they also break down the Super Air, Big Pay, and others in terms of revenue. But the one big concern about it is their debt. I mean, they are taking a lot of loans and sukuk in order to kind of like weather the storm after COVID and even until now.
Yeah, and also, because of this, because of COVID, paying out the dividends and interest rates rising, you can see this, I wouldn't say it's a big snowball, but certainly it is in the opposite direction that it should be. But it's not, I don't think it's catastrophic, but certainly it's a concern. So there's a bit of these negative dominoes happening. But air travel is back, so I think they will do just okay.
Yeah, but the positive side of thing is that the jet fuel prices right now start to ease as compared to previously. So that's one cost that is slowly kind of like helping them save a little bit. And another great thing is that Tony Fernandes is exiting QPR, which is the football club, finally after 12 years. And then he also mentioned that he wants to focus more on AirAsia and Capital A. So interesting thing is that he bought this club for about 35 million pounds. But then when I check what is the market value, right? I'm not sure whether this is correct or whether he sold it at this price, but
yeah,
it looks like he sold it at a loss, like a 10% loss.
Yeah. Okay, look, I'm a football fan. I think you can ignore what's on the right. It could be a lot lower, could be a lot higher.
Okay.
Yeah, I don't know. But I would like to think it's higher, but I've not tracked their the QPR's progress. So if they've on average done better than when he bought it, then it's okay. But if you think about it, QPR when he bought it in 2011, they were I'm not sure if they were in the Premier League, but they were actually in the Premier League in like 2014, 2015, that era. So given that they are not in the Premier League now, it might be maybe even the same as what he paid for, or maybe even a bit low.
All right.
Yeah, because the Premier League is where all the money is. Yeah.
Right. Okay. Got it. And also another interesting thing is the logistics segment kind of thing. So Teleport, which is also another division, they recently just bought or actually ordered 3 Airbus A321 freighters, and they are actually their goal is to grow this fleet of freighters to about 100. So they have like, I believe 4 right now. So they want to add another 96 more, and they want to do some public listing for this Teleport, and basically just raise fund for the company. But what is different from this Teleport and the conventional logistic company is that they want to be like AirAsia's business model, which is to charge a very low rate. So they say that other freight they are charging about like $50 USD, but they don't want to bring down about 47. They want to make it like $5.
Ooh, okay.
Yeah, so they want to kill the competition. I'm not sure how. I'm not sure whether they have the cash to even do that or the volume, but it's a very ambitious kind of strategy. Yeah, but that is Teleport listing. We shall see whether they will manage to realize this in the future. But another interesting thing is that they didn't really talk much about AAX PN17 restructuring. Previously, I think we did mention that AAX is gonna have Capital A's aviation arm because they're gonna like divest and put it back to AAX. But then they did say that it's gonna involve in some sort of like moving in companies without fundraising. So which means maybe it could be like some share transfer.
Yeah.
Like AAX holder may get some, is it AAX or Capital A? I'm not sure whether is it AAX is going to get some Capital A's shares or Capital A is going to get some AAX share. But yeah, so they say that it's not going to dilute shareholders during this restructuring. But then post restructuring, they may do some fundraising to increase cash and also sustain the working cap. But
I think maybe you did this earlier in the week, but I think it was yesterday or the day before. Tan Sri Tony just announced to the world that AirAsia X is ready to get out of PN17 status. That's what he said. And then I think most recently has been bringing the Agong around, you know, our Daulat Tuanku, to go and check out Asia and all that. And then you can see Benjamin Ismail, which is the CEO of Asia X, you know, being there.
Yeah.
So it's showing them around. So he sounds positive, but then again, he always sounds positive. So
yes, always. But yeah, this is just to show you what happens when Capital A start to like strip off their aviation business. I mean, right now the aviation business is the one that is bringing the most revenue and also profit to them. So once it's
losing money.
Yes, correct. So once that strip ups, right, their EBITDA to revenue is actually very small only. I mean, if you count the margin, right, I believe they only make like 1% or 0.07% margin in terms of EBITDA. So that's actually a very huge cut. But we shall see whether, I mean, I know debt side of things will reduce a lot because majority, a huge chunk is coming from aviation. Maybe it's going to be something like SMRT, I'm not sure.
Yeah.
But we shall see. But this is what will happen, assuming that they strip off the aviation. So the final comment is that fuel cost is dropping, which is good for the companies like AirAsia because they charge at a very low airfares. So always this kind of thing drop kind of helps the company a little bit. And then another comment is on the transfer of the aviation arm to AAX. So we're not sure whether will AAX shares will go to Capital A holders or not after the restructuring, because they say it won't dilute shareholders. So I assume that it's going to be some sort of like share transferring.
You will see.
Yeah.
Mr. Tan Sri is not the most simple person, but you will see.
Yeah, but the last one is just teleport listing. That's just about that for Capital A.
Alright guys, enjoying the video so far? If the answer is yes, remember, like, comment, subscribe. And as far as comments go, if you don't like the video, do let us know as well. We always take all sorts of feedback, as long as they're constructive. Okay, last Pastech. Whoa.
Yeah, Pastech has been
jump.
Yes, about like.
Okay, it doesn't look big, guys. It doesn't look big from this photo, but
yeah,
it's a 55% climb in less than a week. Sorry, in a month. But then everything happened within a week.
Yes, correct.
Right, most of these returns happen in a week.
Correct. It's a very silent kind of mood. There's nothing to do with fundamentals. I mean, if you look at the numbers, right, they are making losses at the latest quarter.
Yeah, I mean,
the free cash flow and net debt is very bad.
It's horrific. But then what is the catalyst for this?
Yeah, okay. So the fundamental side of things is bad. The management side also is kind of bad. Right?
Yeah,
because they have like MACC kind of thing. I'm not sure what's happening inside the company, but then it seems like there is some sort of issue going on, but we shall not talk a lot about this. But yeah, this is just came out today only, which is on the today is the 17th, right? 17th of July. Yeah, yes. Monday. Yeah. So this news just came out today as of we are recording it. Basically, Pastech is actually talking with a strategic partner. I believe we have this news from our research team quite early, but it was just rumor that they say that there's going to be a buyout. So, but in the end, it came out to be true. So, I believe there's like a big construction company. They didn't name who is it. It's going to buy like a 10% stake in the company, and then potentially they're going to buy out more. So, that's why it's kind of like an exciting thing. Like some big company is acquiring Pastech to save them. Yeah. Just to put it, so it's actually not much of the news, but then it is what is reported there lah. So our final comments is two bad things. One is the debt and negative free cash flow, and also the court case. So numbers and management both, they are kind of like struggling a lot. The rise, the 55% rise in like 1 month, I believe that's a very highly speculative bet. Unless you have like insider information. It's same thing like Pelican. I mean, Pelican also, when they want to divest their core business, nobody knew what's happening except the insider. But then finally we get to know, the news is finally out already. So there's going to be a strategic partner. A large construction company is going to buy them up and help them. Yeah,
I think all the best to Pastech, but the entire business model is very unattractive. You are building what is power... I can't remember exactly what, but
power station, substation.
Yeah, power substation.
Yeah.
EPCC related. It's never.
Yeah, if I can recall, I believe like 40 to 50% of their loan is in US. So, and the interest rate, right?
And the currency. There you go. Yeah. So yeah, guys, I think that's about it. But before you go, just let you know, if you want to get all these insights that we share with you faster, you should hop on to our FIRL Pro program, right? We actually write, 1 to 2 reports every month minimum for you to read so that you can shortcut your journey to learn about all this. And we also have Telegram groups where you can network with us and also people, inside the industry. So if you want to improve yourself as an investor, it's the best place. And of course, FIRL Pro is designed for people who are really busy. If you want to invest in the stock market, but you really don't have the time to research, this is the best program for you, because we really do a lot of the legwork for you, at least 90% of the way. The decision for you to invest or not to invest is still up to you, but we will help you present the facts, the for and against, and whether it suits your investment profile. That's it. Now, the returns have been decent so far, right? We are double digits in the span of 10 months. Not too bad. And if you want to get a taste, right, if you're not sure whether this is for you, go check out our free sample. Links in the comments and description. And if you decide to sign up, and then after or within 10 days after reading some of the reports and getting a sense of what FIRL Pro is, and you feel like it's not really for you, you can straight away ask for a refund without any questions asked. So it's totally risk-free, money back guaranteed within 10 days. And regardless whether or not you decide to hop on the FIRL Pro program, thanks for being a good supporter. And I know you're a good supporter because you watched all the way until the end. And I hope to see you in the next video. Peace.